There's another EV player in town, and I'm not sure this one's messing around. What's up, everybody? I hope you're having an amazing Wednesday. Hit that like button, buckle up, because I have some stories for you. Let's get right into it and talk about Moderna. The company stock gapped up to nearly $92 a share from yesterday's $75 close on positive news of their phase 1 trials. To which many of you may be asking, is now the time to buy Moderna, or have you been holding this for a while and maybe think that this is the time to sell? Well, let's take a look and see exactly why this is moving and if it's worth either of those things. Last night after hours, it was announced that Moderna Inc.'s experimental vaccine for the Rona showed it was safe and provoked immune responses in all 45 healthy volunteers in an ongoing early-stage study. None of the volunteers experienced a serious side effect, but more than half reported mild or moderate reactions such as fatigue, headache, chills, muscle aches, or pain at the injection site, which honestly is pretty normal even when you get the regular flu vaccine. These were more likely to occur after the second dose and in people who got the highest dose, the team had reported in the New England Journal of Medicine. As you may recall, Moderna was the first to start human testing on a vaccine for the Rona on March 16th, and that's 66 days after the genetic sequence of the virus was released, which is just a mind-blowing speed. Now, with that kind of news, it may seem like a no-brainer to buy, and if by some chance Moderna is the first one to actually pull this off, the stock will go absolutely insane. But there are still inherent risks here. If you recall, the last time they had news like this, Moderna's soon-to-be former CFO had dumped tens of millions of dollars worth of shares into the news at the exact same time it was released, which in my opinion was shady as if you ask me. Perfectly legal, to be clear, but I mean, come on, it's fishy. Just to add insult to injury, Moderna then came out with a giant offering worth up to $1.34 billion. At that time, the stock then tanked nearly 50% in the 6 trading days following due to the sell-off. Now, though, this could get some serious movement still, but there are still also key things to consider here. According to Ricky Bobby,
if you ain't first, you're last. You know?
And if Moderna isn't the first to a successful vaccine, then it's going to be a really bad day for investors. There are over 100 companies in this race, and there are a few of them looking to catch a draft to pull them ahead, or again, as Ricky Bobby would call it, slingshot engage.
Slingshot engage.
Just this month, 2 of 4 experimental coronavirus vaccines manufactured jointly by Pfizer and BioNTech received fast-track status from the FDA on July 13th. The candidates, whom are here in the U.S. and in Germany, are being evaluated in phase 1 and 2 clinical studies. Most notably, one of the studies showed positive results on humans in the United States earlier in the month, while results from Germany are expected to be released later this month as well. If these trials prove successful, both BioNTech and Pfizer said they would be able to develop 100 million doses by the end of the year. Whoa. And most likely more than 1.2 billion doses by the end of next year. That is astounding. And if by some chance they pull ahead of Moderna, it could spell disaster for Moderna the company, its stock, and especially you, the investor. In my opinion, I think Moderna is still super risky at best, as they have a ton of debt, which is evident from their latest offering, and they have yet to ever have developed a drug that has actually been mass-produced. But now I want to turn the question back on you. Who wins this race, and does it actually matter? Can more than one company actually make separate vaccines and be worth sitting in for the long term? Let me know in those comments below as we move on to Ford and what they have going on that's shaking up the market. Over the last few trading days, Ford has had quite the run, moving over 15% since Friday on the reveal of the highly anticipated Bronco rebirth. After 24 years, Ford relaunched the 2021 Bronco with a grand reveal streamed Monday evening on ABC, ESPN, and National Geographic, with each short film displaying a different member of the family. The Bronco 2-door, the Bronco 4-door, and the Bronco Sport. Now, this isn't the 1966 Ford Bronco your dad took your mom to the drive-in with, and no, it's not even the one that OJ took an innocent Sunday drive-in. However, the DNA from that iconic model seems to be present in this modern take of the Bronco 2, as well as the 4-door version. The third model, the Bronco Sport, is a comfier, smaller, and cheaper spin-off that is designed to be capable of off-road as well as function as a daily driver on the city streets and highways. Back in 1966, the Bronco was said to have been made to compete with the Jeep Wrangler CJ5 and CJ7, and so this rebirth is said to attempt to do the same, especially with its four-door version. All right, full disclosure here. As an owner of 3 Jeeps and a Rubicon currently, I know I'm going to have a biased opinion about this, but my opinion on the vehicle itself is that it looks like complete dog shit. It literally looks like a Toyota FJ Cruiser, and the Jeep Wrangler had a love child, and not a pretty one at that. Much like a lot of these rebirths, I don't think it honors the original Bronco at all, but that being said, the hype surrounding this is real, and they are taking a minimum $100 deposit on these for the base model and up to $250 for the higher end trims. Production on the new Bronco 2 and Bronco 4 is set to begin in early 2021, with the first models arriving in dealerships next spring. Ford's next quarterly report is coming up at the end of the month, and I would be interested to see how many orders do come in. It's likely we could see the stock run into those earnings and run at its recent $7.75 highs. Could be very possible. That being said, be aware of what these upcoming earnings are going to truly show. We know that Ford has had to shut down plants and halt production, and were shut down much longer than of, let's say, Tesla, for example. Not only that, but we still don't know when their dividends will be reinstated, which in my opinion would be a much bigger catalyst than the Bronco itself. So leading up to earnings, this may have a run at some decent previous highs, but I would make sure that you understand just what you're getting into going into those earnings reports on July 30th. And with that being said, let me know what you think about the Bronco. Do you love it? Do you hate it? Could this be what it takes to wake up Ford from its Rona slumber? And is this worth buying up at this price? Or are the dividends going to have to return before you do? Let me know in the comments below. And before we get to the next EV company going public, real quick, I would love to invite you over to click the join button next to subscribe and become part of the Chaos Crew. Get some sweet badges, a daily watch list exclusive to the crew, and a weekly Q&A with me that's private to channel members. If that's something that interests you and you would like to help support this channel, I would love to see you there. Next up, there's another EV player in town, and I'm not sure this one's messing around. It's got a history of making electric vehicles look like works of art, even though the company sadly ended up going bankrupt when it was once a private company. Electric car maker Fisker Inc. is hoping to ride on some of the investor hype surrounded around electric vehicles and blank check companies to get its first vehicles onto roads in a couple of years. Fisker and Spartan Energy Acquisition Corp., ticker symbol SPAQ, is a special purpose acquisition corporation or a blank check company backed by Apollo Global Management Inc. and announced their merger on Monday. The deal valued Fisker at $2.9 billion, and it is expected to close in the fourth quarter. Now, this is one that I'm actually excited about and could have some legs if everything goes right for Fisker. If any one of you recall the Fisker Karma when it was around, that was a simply beautiful looking car in the early days of EV concepts. Fisker's timing of going public makes all of the sense in the world, as it is taking advantage of Tesla's monstrous rally and the rest of the EV plays such as Workhorse, Tortoise, Nikola, and Neo. Its flagship vehicle now, though, unlike some of its smaller rivals, Fisker already has a vehicle designed. The Fisker Ocean is a fully electric SUV, and this thing has got a lot of people pumped up. I think this looks a little bit like a Range Rover Evoque, which isn't an insult to the vehicle at all. In fact, I like that it looks a bit more practical than some of these outlandish EV designs that we have seen. With the funding from the reverse merger, Fisker hopes to start producing the Ocean by late 2022. Keep in mind as well that certain institutional investors will provide an additional $500 million in funding for this venture, and they will be able to do so at just $10 per share. What does that actually mean? It means dilution, which we have seen a ton of recently with these plays. We see a lot of hype, shares get converted, and the stock comes down, and then we wait, and we wait some more. We are currently seeing that already with Neo. Remember that I said last week to understand the risk with this thing, and many of you didn't want to hear it. There's a reason it has had the most share volume over any stock in the market for a week straight and yet has barely moved. It was because while you were buying this thing up thinking it was going to the moon, institutions were dumping shares at the exact same time. Now investors are sick of fighting it and aren't buying this thing up anymore, while institutions are relentless with the dumping, and thus we see now that the stock is down about 25% from its highs as of this recording. Will Fisker be a repeat of the same? Well, here's a few things about the company that I think are different. Fisker, the man himself, is best known for designing luxury vehicles for companies such as Ford, BMW, Aston Martin, and the like. He is a proven designer with a history of developing legendary vehicles, and if he can start to produce vehicles like the Fisker Emotion we saw at CES in January, while keeping offerings in dilution at bay, I think this company could finally be at least a contender in the EV space. It's also worth noting that Fisker said it has been in talks with Volkswagen to use the German automaker's EV platform. That partnership is under negotiations, but terms are worked out and an official announcement is expected in the second half of 2020, quoted by Fisker himself. This partnership would allow Fisker to enter into the market in half the time and with substantially reduced costs. Fisker had also mentioned this to investors at an earlier convention. Volkswagen could also supply parts and components to Fisker, giving the company access to Volkswagen's world-class supply chain and all the pricing and quality advantages that come with it as well. And as you may have learned by now, or at least I hope you have, all of these speculative EV reverse merger SPAQ stocks are just that. They're speculative at best, which means they come with higher risk than the average stock does. A lot of things have to go right, but I think Fisker's second shot at this might be a good one. But let me know what you think about this in the comments below, and if you would like to know more about some of the work-from-home stocks that I think are really set to go off through the end of the year, click this video up here, or if you happen to miss this week's Stock Watch Sunday live stream, click this video here. Please like and subscribe, and as always, folks, I will see you all before the bell, and B. Smith is out.